Your wealth didn't disappear overnight. There was no dramatic announcement, no breaking news moment, no single policy you could point to and say, "That's what did it." Instead, your wealth was taken apart slowly, quietly, and with precision, piece by piece, while the public was distracted by headlines that were never the real story. And the moment the Chancellor finished speaking, whether you realized it or not, the direction of your financial future changed. Permanently. Because this budget wasn't simply a collection of tax adjustments and policy tweaks. It was a reset, a structural redirection of how wealth will be earned, taxed, stored, and controlled in the United Kingdom for the next decade. If you fail to understand these changes now, you won't just miss opportunities. You'll lose income, lose stability, and potentially lose the one asset the government has now placed squarely in its sights: your home. Today, I'm going to break down exactly what this budget really means for you: your savings, your mortgage, your pension, your rent, your investments, and your ability to build or protect wealth in this country ever again. None of this is speculation. The changes are already live, the consequences are already unfolding, and the impact will hit long before most people realize what has happened. For years, people assumed that the UK economy would follow the same predictable cycle. Prices rise, markets dip, government tweaks policy, and everything eventually resets. But this time is different. This time, the foundations themselves are being rearranged. The budget signals a shift toward a model where the government, not households, decides where capital should flow. Instead of rewarding saving, the system now punishes it. Instead of supporting ownership, the system now makes it harder. Instead of strengthening financial security, it is deliberately introducing more risk into everyday life. What most people haven't realized yet is that this budget was not designed for 2024 or 2025. It was designed for the next decade, a long-term repositioning meant to solve the government's fiscal problems at the expense of your financial stability. The UK's debt is high, productivity is low, growth is stagnant, and tax revenue isn't keeping up with spending. Rather than reform the system, the government has chosen to extract more from ordinary people quietly and systematically. These minor adjustments are nothing short of a multi-year wealth transfer program. And the most concerning part is this: once these mechanisms are in place, they never get reversed. Frozen tax bans don't suddenly unfreeze. ISA restrictions don't magically loosen. Pension caps don't disappear. Once the government realizes how easy it is to take more by doing nothing, the trend becomes permanent. The pressure on households increases year after year until people finally notice, and by then, the damage is already done. This is why understanding what's happening now is not optional. It's essential for your survival in this new economic system. Let's be perfectly clear, this budget wasn't written for the average worker trying to stay afloat as the cost of living spirals. It wasn't written for families struggling with rent, bills, and childcare, and it certainly wasn't written for young people fighting to save a deposit while wages failed to match inflation. This budget was engineered with one objective: push money out of property and force it back into the wider economy, even if it destabilizes millions of people who did everything right. The government knows the truth. The housing market is frozen. Transactions have collapsed to levels unseen in years. Affordability has hit a multi-generational low, and the economy, without a functioning housing market, is suffocating. Instead of fixing the deep structural failures, broken planning, chronic undersupply, unaffordable mortgages, stagnant wages, they've chosen a different strategy. A strategy that targets the people who saved, invested, and relied on property as their financial safety net. This budget signals the beginning of a long, deliberate process. Drain money out of assets and funnel it into what the government calls productive sectors. This has nothing to do with helping households. This is about redirecting capital, your capital, into places the government wants it, regardless of how much personal damage it causes. and it begins with one of the simplest, most devastating tools ever used against ordinary earners: frozen tax bans. You don't need to increase income tax rates if you can take more from people quietly. By freezing thresholds while wages and inflation move upward, the government is pushing millions into higher tax brackets without those people earning a single extra pound in real terms. If you earn between £35,000 and £50,000, if your income relies on overtime, bonuses, commissions, your tax bill will rise automatically every year until 2028. No announcement, no vote, no discussion, just extraction. This stealth tax is already draining billions from households. It's one of the largest tax grabs in modern UK history, hidden in plain sight. And it is only phase 1. The next target? Your savings. The government knows that cash savings slow down their economic agenda. Cash doesn't stimulate markets, it doesn't fuel investment, and crucially, it doesn't help the government borrow. So under the new ISA rules, if you want to use the full £20,000 allowance, you can no longer keep it entirely in cash. You're pushed into stocks, funds, and markets, whether you like it or not. This is a major blow to first-time buyers who rely on cash for their deposits. Now, almost half of their savings must be exposed to market volatility, meaning a single downturn could erase months or even years of progress. This wasn't an oversight. It was a calculated move to make saving safely nearly impossible. Then we reach what may be the most significant change in the entire budget: the pension cap. For years, pensions were the final remaining tax shelter available to ordinary people trying to get ahead: business owners, landlords, directors, freelancers, higher earners. With one policy change, that door has effectively been shut. The new cap forces thousands to pay full tax on money they could previously shelter legally. It also removes one of the key tools small investors used to balance rising taxes and property pressures. One of the last pathways to long-term protected wealth, gone. And it doesn't end there. Higher taxes across the board are now hitting rental income, dividend income, savings interest, and investment returns. A 2-point rise sounds small until you apply it to real portfolios, real tenants, real businesses. For landlords, small company owners, and private investors, this is thousands, sometimes tens of thousands, taken every year. This isn't adjustment. It's dismantling the property wealth model one brick at a time. Even if you don't own a high-value property, the psychological damage to the housing market is enormous. High-end buyers are pausing, international investors are stepping back, developers are slowing acquisition. Confidence, the thing the UK housing market depends on more than anything, has been shaken sharply. When confidence collapses at the top, the bottom of the market eventually follows. That's how the UK system works. And then we reach the so-called energy support. Yes, bills may fall in the short term, but those small wins are cancelled out by rising transport costs, new EV taxes, shifting rental behaviours, and suppressed rural demand. Every benefit comes with a cost hidden behind it. One hand gives, the other takes double. So what does all of this lead to? It leads to a future where property is taxed harder. Cash savings are discouraged. Ordinary people are forced into higher-risk investments. And the government controls the flow of capital more tightly than ever before. This was not a temporary budget. This is the blueprint for the next 10 years. The wealth-building rules in the UK have changed, permanently. Those who recognise the shift early, who understand where risk is growing and where opportunity still exists, will protect their savings, their home, and their financial future. Those who continue playing by the old rules will eventually discover that the system has moved on without them. If you want to stay ahead of what's coming before it hits your wallet, subscribe now. The UK economy is entering a new phase, and every saver, homeowner, renter, and investor needs to understand the new framework before the next wave of reforms arrives. Stay alert, stay informed, and stay ahead, because in the system being built right now, your wealth becomes the next target if you don't act.